Is Amphenol's leadership truly untouchable? Amphenol's latest 8K filing reveals the results of their 2026 meeting. On the surface, it is a landslide victory for management. The board of directors was cleared with over 80% support. Deloitte's ratification as auditor passed with a 93% vote. And the Xeon Pay Advisory received a 92% green light. This is more than just a procedural formality for the company. It signals deep institutional alignment with their capital allocation strategy. Management is now fully backed to pursue high-margin connectivity solutions. This includes aggressive R&D in AI infrastructure and electrification. With governance risk neutralized, they can accelerate strategic acquisitions. For investors, this translates directly into execution certainty. It de-risks the stock's premium valuation by removing boardroom friction. However, we must analyze the antithesis of this narrative. The near-unanimous vote might actually be a carefully crafted Façade. Raw numbers show 58 million shares voted against at least one director. That is roughly 5% of the total voting power in dissent. Even more telling is the 48 million shares that abstained. Abstentions often signal latent worries about board independence, or perhaps concerns regarding outsized CEO compensation packages. The quorum was only 91% of outstanding shares. This leaves a silent 9% that could mobilize quickly. This could happen if earnings falter or leverage becomes unsustainable. Specifically, the notes due in 2030 are a key metric. A fragile governance foundation could lead to a proxy fight or a debt-fueled acquisition spree that threatens shareholder value. We must consider if this dissent is an organized effort. Institutional investors often use abstentions to signal quiet dissatisfaction. This creates a latent risk that could erupt during a downturn. If the board fails to deliver on AI growth, this friction intensifies. So, how do we synthesize these two opposing viewpoints? The 8K confirms that Amphenol has successfully navigated its requirements. The status quo remains intact for the board and auditors. While the bull case emphasizes stability and execution certainty, the bear case highlights specific voting gaps as warning signs. Investors should monitor these friction points alongside capital expenditure. We must track the 3.125% notes and the debt load. Ultimately, Amphenol has a strong mandate, but not a perfect one. Watch the leverage and the dissent as they scale their AI play. That is the full picture of Amphenol's governance stability.